To the economy, where today there were more mixed signals about our financial state of affairs. The markets continued to tumble. The TSX fell 233 points. The Dow was down 115. Investors appear increasingly nervous about a slowdown in Europe. The news here at home appears better. Canada created 74,000 jobs last month, pushing the unemployment rate to its lowest level in nearly 6 years. But as Eric Sorensen is here to tell us, our economy is climbing a slippery slope. Eric?
Robin, it's an unexpected jump, though no surprise that two provinces stand out. Ontario, with the biggest economy, added 25,000 jobs, dropping its unemployment rate to 7.1%. And then Alberta, which has the hottest economy, added 21,000 workers, and the jobless rate falling to a remarkable 4.4%. All of that giving the federal government reason to crow.
An increase of 74,000 net new jobs in September, with the vast majority of these jobs being full-time, Mr. Speaker.
But, and there's always a but, it seems, in the economy, storm clouds are gathering in the oil patch. In Canada, manufacturing may be the lifeblood, but oil is the adrenaline. It has energized this country's economy and put Alberta on a path to overtake Quebec as the second largest provincial economy within a few years. But oil prices have plummeted. Not long ago, oil was selling for more than $100 a barrel. It's now below $85 US, a dramatic turn that could cost Alberta $1 billion in royalties.
It's definitely going to be a downside risk for overall provincial revenues for the rest of the year and beyond the rest of the year if oil prices stick at these levels.
Many reasons for a downturn. The U.S. has a glut in shale oil production. The Chinese economy has slowed, and there are signs of a recession in Europe. Watching that, the stock market has become volatile. The Dow down 2% this month as oil prices head south.
The oil slide down 20% since July. What low oil prices mean for the economy.
In Canada, any downturn in the oil sector hits not just Alberta, but Saskatchewan and Newfoundland and Labrador as well. These are the newcomers in Canada's oil boom. But this country has, in simple terms, a two-track economy. And for traditional manufacturing provinces led by Quebec and especially Ontario, a downturn in the West can mean an upturn in central Canada. One impact of lower oil prices, it tends to bring down the Canadian dollar. And that can be good for big sectors like automobiles and exporters, along with cross-border business and tourism.
The exporters are going to find that their prices are more attractive to countries that import from Canada now that the Canadian dollar is likely to be of a lower value.
The economy can be mystifying, but there's one place consumers get the difference from the macro economy to the micro.
I'm going to notice the price filling up the truck, so it's definitely a lot better.
Plummeting oil prices globally have a way of trickling down to your nearest gas pump. Eric Sorensen, Global News, Toronto.